Alright, before we jump in, a quick but important heads up. The information in this presentation is for educational purposes only. Think of it as a masterclass, not as direct financial or legal advice for your specific company. Insurance is complicated, and your business is unique, so always consult with a qualified, licensed professional who can look at your exact situation. Okay, let's do this. You just landed the contract, the one you've been chasing for 6 months. It's a game changer, the kind of deal that takes your business from a side hustle to a serious player. You're ready to pop the champagne, call your family, maybe even buy that new espresso machine for the office. You're scanning the final pages of the agreement, just a formality, and then your eyes freeze on a single paragraph. It's dense, filled with legal jargon, but a few words jump out: certificate of insurance, additional insured, and a terrifying number: $5 million in general liability coverage. Your heart sinks. Your current policy, the one you bought online in about 15 minutes because it was cheap and easy, tops out at $1 million. You have 72 hours to deliver that certificate or the deal is dead. What do? This isn't a hypothetical horror story. This exact scenario, or 1,000 variations of it, plays out every single day in offices, workshops, and warehouses across America. It's the hidden terror of every entrepreneur. The moment you realize the safety net you thought you had is either too small, full of holes, or wasn't there at all. The truth is, the single biggest threat to your business isn't a new competitor, a bad economy, or a negative Yelp review. It's a risk you never saw coming, covered by an insurance policy you never truly understood. And that's the core of the problem, isn't it? As a business owner, you're an expert in your field. You're a master baker, a brilliant coder, a visionary marketing consultant. You're not an insurance expert. You don't have time to decipher the difference between claims made and occurrence policies, or to understand what a coinsurance penalty could do to your bottom line. So you do what most people do. You go online, you answer a few questions, you pick the cheapest option that looks good enough, and you hope for the best. You're essentially walking a tightrope 100 stories up, blindfolded, with no idea if the rope is even tied off on the other side. But what if you had a guide? What if you had a seasoned professional in your corner whose entire job, their entire reason for existing, was to navigate this complex world for you? Someone who wasn't just selling you a product, but was building a fortress of protection around the business you've poured your blood, sweat, and tears into? That person exists, and they are, without a doubt, the most underrated, underutilized secret weapon in the arsenal of successful American businesses. I'm talking about a commercial insurance broker. Now, I know what some of you might be thinking. A broker? Isn't that just another salesperson? Another middleman taking a cut? That's the single biggest misconception, and by the end of this video, I'm going to completely shatter it for you. We are going to pull back the curtain on the entire commercial insurance industry. You will learn why thinking of a broker as a salesperson is like thinking of a heart surgeon as just a person with a knife. It misses the entire point. You're going to understand that a great broker doesn't work for the insurance company. They work for you. Their loyalty, their expertise, their entire focus is on your success and your survival. Over the next few minutes, we're going to explore exactly why this one relationship can be the difference between your business thriving for decades or being wiped out by a single unlucky event. We're going to break down the 4 critical roles a broker plays: the navigator, the translator, the advocate, and the strategist. Forget everything you think you know. This isn't about buying insurance. This is about building a partnership that becomes one of the most valuable assets your company will ever have. Let's start with the first and perhaps most obvious role, the broker as the navigator. Right now, there are hundreds, if not thousands, of insurance carriers in the United States. Some are household names. Others are highly specialized, niche companies you've never heard of. Some are fantastic. Some are not. When you go online or call the number on a TV commercial, you're talking to what's called a captive agent. They're a good person, they're probably very helpful, but they can only sell you products from one company, the one that signs their paychecks. It's like walking into a Ford dealership and asking them to show you the best truck on the market. They're going to show you a great F-150, but they're never, ever going to mention that a Dodge Ram or a Chevy Silverado might be a better fit for your specific needs. A broker, on the other hand, is independent. They're the master of the entire marketplace. They don't work for Ford or Chevy. They work for you, the truck buyer. They have access to dozens, sometimes hundreds, of different insurance carriers. They know which ones specialize in restaurants, which ones offer the best cyber liability for tech startups, and which ones have the most flexible coverage for construction contractors. They can take your unique business, with all its quirks and specific risks, and put it in front of the entire market to create a bidding war for your business. They navigate the vast, confusing ocean of options to find the 1, 2, or 3 carriers that are the absolute perfect fit for you, not just in price, but in the quality and specifics of the coverage. They do the shopping, the vetting, and the analysis that you simply don't have the time or the expertise to do yourself. This access alone can save you thousands of dollars, but more importantly, it ensures you're not just getting a cheap policy, you're getting the right policy. But finding the right policy is only half the battle. Now you have to understand it. And that brings us to the second critical role, the broker as the translator. Let's be honest. An insurance policy is one of the most unreadable documents on the planet. It's 100 pages of dense, mind-numbing legalese designed by lawyers for lawyers. Words like indemnification, subrogation, waiver of sovereign immunity, per occurrence limits versus aggregate limits. It's a foreign language, and a single misunderstood word or clause can be the difference between a covered claim and financial ruin. A broker is your personal expert translator. Their job is to take that impenetrable document and turn it into plain English. They sit down with you and say, okay, see this section here? This means if a client slips and falls in your lobby, you're covered up to $2 million. But see this exclusion on the next page? It says that if the person who fell is one of your own employees, this policy won't cover it. That's why we need a separate workers' compensation policy, and here's how they work together. They transform a document of pure anxiety into a tool of empowerment. For the first time, you're not just hoping you're covered. You know what's covered, what's not covered, and why. This clarity is priceless. It allows you to make informed decisions about the risks you're willing to accept and the ones you need to transfer. Without a translator, you're just signing a contract in a language you don't speak and praying it says what you think it says. A broker makes sure you're fluent. And this fluency isn't just about understanding the fine print on a single document. It's about understanding the entire landscape. Think of the insurance market not as a single store, but as a massive, sprawling city. There are the big, well-lit avenues. These are the giant household name insurance carriers you see on TV. They're easy to find. You can walk right into their online storefronts and buy a policy off the shelf. And for a simple business like a small accounting firm or a local coffee shop, that might be enough. But what if your business doesn't fit neatly into their prepackaged boxes? What if you're not on the main avenue? What if your business is located in the specialized, hard-to-find districts of this city? The districts for tech startups, for high-risk manufacturing, for businesses that do things that didn't even exist 5 years ago. If you try to navigate this city on your own, you'll spend all your time wandering the main streets, getting rejected because you don't fit their standard model, never even knowing that the perfect solution is hidden down a cobblestone alley you can't see from the highway. A broker is your local guide. They have the map. They know the shortcuts, the back alleys, the unmarked doors that lead to the most exclusive, specialized markets. This is one of the most misunderstood and powerful advantages of a broker access. They have access to dozens, sometimes hundreds of insurance carriers that you as a business owner will never ever hear of. These aren't the companies spending $1 billion on Super Bowl ads. These are the niche, specialized carriers that only work with other insurance professionals. They don't want to talk to the public. They want to talk to experts who speak their language. The broker is your passport into this exclusive world. Let me tell you about a business owner. Let's call her Maria. Maria started an amazing company that designed and installed custom, high-tech security systems for commercial buildings. We're talking biometric scanners, AI-powered surveillance, the whole 9 yards. Her business was growing fast, but she had a huge problem. She went to get her general liability and professional liability insurance online. The standard carriers took one look at her business and ran for the hills. Why? Because she didn't fit their algorithm. To them, security meant a guy in a uniform standing by a door. It didn't mean a complex network of cloud-connected sensors and artificial intelligence. They saw her work as a combination of construction, software development, and professional consulting. Their underwriting systems threw up a giant red flag. One carrier quoted her a price so high it was basically a polite way of saying please go away. Another flat-out declined her, saying her operations were outside of their risk appetite. Maria was stuck. She was a brilliant engineer and entrepreneur, but she was lost in the insurance city. She was on the verge of either operating with massive, business-ending gaps in her coverage, or paying a premium that would cripple her company's growth. She felt like the market was punishing her for being innovative. Then, a mentor told her to call a specialized commercial broker. Maria was skeptical. She thought, what can this person do that I can't? I've already called everyone. But she was desperate, so she made the call. The broker listened to her story for an hour. He didn't just ask about her revenue. He asked about her installation process, her software protocols, her client contracts, her quality control. He wanted to understand the business on a molecular level. Then he said, okay, I know exactly who we need to talk to. He didn't go to the big, mainstream carriers. He knew that was a dead end. Instead, he accessed what's known as the surplus lines market, or the non-admitted market. Now, these terms might sound scary, but they're not. Non-admitted simply means the carrier isn't licensed by the state in the same way standard carriers are. This gives them the flexibility to insure weird, wonderful, and complex risks that standard carriers can't touch. They are the specialists, the innovators of the insurance world, and they create custom-made solutions instead of selling off-the-shelf products. This broker had relationships with 3 different surplus lines carriers that specialized in technology and security risks. These carriers weren't scared of Maria's business. They were excited by it. They understood the technology. They had underwriters who were experts in that specific field. The broker took Maria's detailed story and translated it into a compelling underwriting submission. He highlighted her safety protocols, her team's deep expertise, and the robust language in her client contracts. He wasn't just filling out a form, he was making a case. He was advocating for her. He was her lawyer in the court of insurance. The result? He came back to Maria not with 1, but with 3 competitive quotes. The policies were tailor-made for her business, covering her specific risks from faulty hardware installation to a data breach originating from her software. And the best part? The final premium was less than half of the insane quote she had received on her own. The broker didn't just find her a policy, he found her a home. He took her from an uninsurable pariah to a sought-after client by simply knowing which doors to knock on. That is the power of access. This isn't just about high-tech businesses either. It applies to contractors who do high-risk work, restaurants that need liquor liability, nonprofits with unique exposures, manufacturers creating new products. Any business that isn't vanilla ice cream needs a guide to find the carriers that specialize in their flavor. But access isn't just about finding the hidden markets. It's also about leverage. When you, a single business owner, call an insurance company, you are one customer. You have 0 leverage. You are a price taker, not a price maker. A good broker, on the other hand, might represent hundreds of businesses. They might place millions, or even tens of millions of dollars in premium with a single insurance carrier each year. When the broker calls, the carrier listens. They have a relationship. The carrier knows the broker brings them good, well-managed businesses, and they want to keep that relationship strong. What does this leverage mean for you? It means when the broker presents your business, the underwriter takes it more seriously. It means the broker can negotiate on terms, pushing for better coverage or the removal of a pesky exclusion. It means they can often get more competitive pricing than you could ever get on your own. And most importantly, when you have a claim, it means you have a powerful advocate in your corner. If a carrier is dragging their feet or trying to deny a legitimate claim, a call from a broker who sends them $10 million of business a year carries a lot more weight than a call from, well, just you. It's the difference between walking into a nightclub alone and hoping to get past the velvet rope versus arriving with the club's owner. You get treated differently. Your broker's reputation becomes your reputation. Their leverage becomes your leverage. They're not just your guide. They are your ally, using their deep-seated industry relationships to your direct benefit. So when you think about a broker, don't just think of them as someone who fills out applications. That's like saying a great chef just heats up food. The real work, the real value is in the unseen. It's in the years they spent building relationships. It's in their encyclopedic knowledge of which carriers excel at which risks. It's in their ability to open doors that are locked, bolted, and hidden from public view. Without that access and leverage, you're not shopping in the whole market. You're just looking in the window of the one store on your block, hoping they have what you need. A broker takes you out of that one store and gives you a VIP pass to the entire mall. They ensure you're not just buying a policy, you're accessing a custom-built solution from the best possible partner, on the best possible terms. And those terms, that partner, that's not just some abstract business concept. It's the difference between weathering a storm and being completely wiped out by it. It's the difference between a minor setback and a catastrophic failure. Let me make this real for you. Let's talk about a guy named David. David wasn't a Wall Street tycoon. He ran a mid-sized custom fabrication shop in Ohio. Think high-end metalwork, custom parts for machinery, architectural pieces. It was his passion, his life's work. He had about 15 employees, a workshop full of expensive specialized equipment, and a growing list of clients. When he first started, he did what most business owners do. He called the number on a TV commercial for a big, household name insurance company. Let's call them Omnicorp. The agent at Omnicorp was friendly professional. He sold David their artisan manufacturer's package. It sounded perfect. It had general liability, property coverage, workers' comp, all the greatest hits. David felt a wave of relief. He checked the Get Insurance box off his endless to-do list and got back to what he did best, bending steel. For 5 years, the checks were cashed, the policy renewed, and David never thought twice about it. His business was thriving. Then came the storm. Not a hurricane or a tornado, but an economic one. A major client, representing about 40% of his revenue, went bankrupt overnight. They owed him over $200,000 for a massive completed project that was sitting on his workshop floor, ready to ship. It was a gut punch. But then David remembered something his Omnicorp agent had mentioned years ago. Accounts receivable coverage, a part of his big, comprehensive package. It was supposed to protect him if a client defaulted. This was exactly that scenario. He wasn't worried. He was insured. He filed the claim. He sent in the invoices, the contracts, the emails. He waited and waited. A month later, a thick envelope arrived. It wasn't a check. It was a denial letter, dense with legal jargon. Buried in the fine print of his policy, under a subsection of a subsection, was an exclusion. The accounts receivable coverage only applied if the client's bankruptcy was officially filed after the goods were delivered and invoiced. Because David's client went under while the custom-made project was still on his property, it wasn't technically a receivable in the eyes of Omnicorp. It was, according to them, a finished goods inventory issue, which was subject to a completely different part of the policy with a measly $10,000 limit. $200,000 of work and materials gone, wiped out by a single sentence of fine print that his friendly one-stop shop agent had never mentioned, probably because he didn't even know it was there. He was a generalist, selling a pre-packaged product designed to fit millions of businesses, which meant it didn't truly fit any of them perfectly. David was facing layoffs, maybe even closing his doors. The safety net he'd been paying for faithfully for 5 years had turned out to be a spiderweb. This is the exact moment where the path splits. This is where a broker changes the entire game. A friend, horrified by the story, referred David to an independent broker who specialized in manufacturing. Let's call her Jessica. The first thing Jessica did wasn't try to sell him a new policy. The first thing she did was listen. For 2 hours, she listened to David vent, explain his business, his process, his clients, his fears. Then she went to work. She didn't just ask for his revenue and payroll. She asked for a list of his top 5 clients and the terms of his contracts. She asked for an inventory of his equipment, including the age and origin of his CNC machines and plasma cutters. She walked through his workshop. She pointed out that the German-made laser cutter he just bought had specific maintenance requirements that, if not documented, could void a standard equipment breakdown policy. She noticed that his team occasionally did on-site installation, which created a liability exposure his old Omnicorp policy didn't even contemplate. She saw his business not as a category, artisan manufacturer, but as a unique, living organism with its own specific risks and vulnerabilities. The bankrupt client wasn't just a bad debt. It was a flaw in his business process that needed an insurance solution. Jessica then took this deep understanding of David's business to the marketplace. She didn't go to one company. She went to 15. She approached standard carriers, but also specialty insurers who only work with manufacturers. These were companies David had never heard of, companies that don't run Super Bowl ads. Their business is built on expertise, not brand recognition. She came back to David not with a single quote, but with a strategy. She said, "Okay, here's the plan. We're going to place your property and equipment coverage with a carrier out of Pennsylvania that specializes in machine shops. They have the best-in-class equipment breakdown coverage, and they understand the value of your German laser cutter. Their policy is built for shops like yours. Next, your general liability and workers' comp, we're going to place with a regional carrier here in the Midwest. Their safety programs can actually give you a dividend back at the end of the year if you have a low claims history, which you do. This will save you about 15% right off the bat. And finally, for your professional risk and that accounts receivable problem, we're going to get a standalone trade credit insurance policy from a specialist in London. This policy is designed specifically to protect you from client insolvency. And it doesn't have that ridiculous on-site exclusion. It will cover your costs and lost profit whether the goods are on your floor or on a truck to the customer. Look at what just happened. The broker, Jessica, acted as a professional risk architect. She deconstructed David's needs and rebuilt his coverage piece by piece, using best-in-class components from different, specialized providers. She took him from a generic, ill-fitting package deal to a bespoke suit of armor, tailor-made for his exact operations. And the craziest part? The total premium for this vastly superior multi-carrier program was almost the same as what he was paying Omnicorp for his one-size-fits-none policy. The value wasn't just in the price. It was in the certainty. It was in knowing that the policy was built around his reality. The broker's job wasn't to sell a product off a shelf. It was to conduct a deep diagnosis and then scour the entire global market for the cure. She wasn't an agent for the insurance company. She was an advocate for David's business. She translated the complex, arcane language of insurance into a business strategy. She found the gaps, the exposures, the ticking time bombs in his old policy that he never even knew existed. That's not a salesperson. That's a partner. That's a defender. That is the fundamental, game-changing difference a great broker brings to the table. They don't just find you insurance, they build you a fortress. And that fortress isn't just built with the standard bricks and mortar of general liability. Anyone can sell you that. The real value, the architect-level genius of a great broker, is in identifying the threats you don't even know are on the horizon. It's about securing the secret passages and hidden vulnerabilities that generic, off-the-shelf policies completely ignore. Think about it this way. When you build a fortress, you prepare for the obvious attack, the army at the front gate. That's your slip and fall, your fire, your basic property damage. But what if the greatest threat isn't a battering ram? What if it's a poison in the well? A saboteur already inside the walls? A threat so subtle, so specific to your kingdom, that you never even thought to prepare for it? Let me tell you about a business owner, we'll call her Jessica. Jessica runs a rapidly growing digital marketing agency. She is sharp, savvy, and incredibly good at what she does. She built her company from a laptop in her spare bedroom to a 20-person team in a slick downtown office. And when it came time for insurance, she did what most smart, busy entrepreneurs do. She went online, filled out a form, and bought a comprehensive business owner's policy, often called a BOP. It had general liability, property coverage, the works. She felt protected. She had built her fortress. Her agency landed a massive client, a national beverage company. It was a game changer, the kind of account that puts you on the map. The campaign they developed was brilliant. It went viral. Awards were won. Revenue soared. Jessica and her team were on top of the world. 6 months later, a letter arrives. It's from a law firm representing a freelance photographer in Europe. The letter alleges that one of the key images in that viral campaign, an image that was now plastered on billboards and websites across the country, was used without the proper commercial license. Jessica was stunned. She called in her creative director, who swore they had licensed it properly through a popular stock photo site. They pulled up the records, and there it was, in the fine print of the license agreement. The image was cleared for digital use up to 500,000 impressions. The campaign had generated over 50 million. The lawsuit demanded $2 million in damages for copyright infringement and unauthorized use. Jessica's first call, after the one to her lawyer, was to her insurance company. She explained the situation, confident that her comprehensive business policy would cover it. The voice on the other end of the line was polite but firm. "I'm looking at your policy, ma'am. Your general liability covers bodily injury, property damage, and personal and advertising injury." Jessica felt a wave of relief. Advertising injury. That's it. This is an advertising issue. Well, the agent continued, advertising injury under a standard GL policy typically covers things like libel, slander, or stealing an advertising idea. It specifically excludes intellectual property infringement like copyright violation. "I'm sorry, but this claim isn't covered." The floor fell out from under her. Her fortress, the one she thought was so strong, had a gaping $1 million hole in it that she never knew existed. The lawsuit threatened to bankrupt her entire company. The legal fees alone were crippling. The big beverage client, terrified of the bad press, paused their contract. Everything she had built was on the verge of collapsing, not because of a fire or a flood, but because of a single line of fine print in a stock photo license. Now let's rewind. Let's imagine that when Jessica was starting out, instead of going online, she sat down with an experienced commercial insurance broker. The broker wouldn't have just asked, "What's your revenue? And how many employees do you have?" They would have started a diagnosis. They would have asked, "Jessica, walk me through your workflow. How do you source creative assets? What's your process for clearing images, music, and video? Who on your team is responsible for vetting licenses? What do your client contracts say about who is liable for this kind of mistake?" These are not the questions on a generic online form. These are the questions of a risk management partner. Hearing her answers, a good broker would have immediately seen the poison in the well. They would have said, "Jessica, your biggest risk isn't someone slipping on a wet floor in your lobby. Your biggest risk is a mistake in the actual work you do. A missed deadline that costs your client millions. A social media post that gets misinterpreted and causes a PR nightmare. Or exactly what just happened. A copyright issue that brings a lawsuit to your door." And then they would have introduced her to a policy she probably never even knew existed. Errors and Omissions Insurance, or E&O. Sometimes it's called Professional Liability Insurance. E&O is designed specifically for businesses that provide professional services or advice. It's malpractice insurance for non-medical professionals. It's built to cover the exact kind of nightmare Jessica was living through. Claims of negligence, mistakes in your work, and failures to perform your professional duties. It covers the legal defense costs and any resulting judgments, up to the policy limit. The broker would have explained that for a marketing agency. An E&O policy isn't a luxury. It's as essential as the computers her team uses. It's the specific shield designed for the specific spears that would be thrown at her kingdom. Furthermore, the broker would have looked at her growing team and asked, "What's your HR situation? Do you have a formal employee handbook? What are your hiring and firing procedures?" They would have identified another massive, hidden vulnerability: her employees. What happens when you have to fire someone? What if a manager is accused of harassment? What if a candidate claims they were discriminated against during an interview? These are not covered by general liability. These are employment-related lawsuits, and they are incredibly common and incredibly expensive. The broker would have recommended another specialized coverage: Employment Practices Liability Insurance, or EPLI. Another layer to her fortress, guarding the gates from threats coming from within. So now let's play out the scenario again. The lawsuit letter arrives. But this time Jessica has a broker. She doesn't panic. She makes one phone call to her broker. The broker says, "Send me the letter. I'll get the claim started with your E&O carrier immediately. They will assign a law firm that specializes in this exact type of copyright law to defend you. Focus on running your business. We've got this." Do you see the difference? It is the difference between ruin and resilience. It is the difference between a sleepless night spent staring at a lawsuit and a confident call to a partner who anticipated this very problem and had already built the solution. The online form sold Jessica a policy. The broker would have provided her with a strategy. The online form saw a generic office business. The broker saw a dynamic, creative marketing agency with a unique and complex risk profile. That's the immense, almost incalculable value. A broker acts as your outsourced risk manager. They take the time to learn the DNA of your business, your operations, your contracts, your vulnerabilities, and then they go to the market and find the highly specialized tools needed to protect you. They don't just sell you the standard sword and shield. They find the specific armor custom-fitted to your body, designed to deflect the unique weapons of your industry. They find the gaps you don't know exist, and they fill them, turning a vulnerable structure into a true, impenetrable fortress. And this fortress isn't built with just any stones. It's built with precision-engineered policies, each one a specific block designed to repel a specific threat. But here's the terrifying truth that keeps smart business owners up at night. You can't protect against threats you don't even know exist. You're worried about the front gate, the obvious attacks like theft or a fire. But the real danger, the one that topples empires, often comes from a forgotten tunnel, a crack in the foundation, a vulnerability so subtle you'd never think to look for it. This is where a broker transitions from being a vendor to becoming a strategic partner, a true sentinel for your business. Let's talk about the unseen risks. These are the assassins in the shadows. Imagine a business owner. Let's call her Maria. She runs a thriving online boutique selling custom-printed apparel. Business is booming. She's smart, so she went online and bought a business owner's policy. It covers her inventory, her equipment, and general liability. If someone slips and falls in her small workshop, she's covered. If a fire destroys her printers and her stock of t-shirts, she's covered. She feels secure. She thinks she's built a fortress. But what she's actually built is a movie set. It looks strong from the front, but it's just a facade, one strong gust of wind away from collapsing. A broker sits down with Maria. They don't start by selling her a policy. They start by asking questions. Deep, probing questions that make her a little uncomfortable. Maria, your designs are fantastic. Who owns the copyright to the fonts and stock images you use in them? What if a freelance designer you hired a year ago claims you're using their work without a proper license? A general liability policy won't touch an intellectual property lawsuit. Suddenly, Maria's eyes widen. She'd never even considered that. The legal fees alone could cripple her. The broker continues. I see you collect customer data for your mailing list and for payments. What's your protocol if your website is hacked? It's not a matter of if, but when. A data breach means notifying every single customer, paying for credit monitoring services, facing potential government fines for privacy violations, and dealing with a public relations nightmare that could destroy your brand's reputation overnight. Your standard policy sees a data breach as intangible. It doesn't see the millions in potential damages. Cyber liability insurance does. This is the first bombshell. But the broker isn't done. Let's talk about your supply chain. You get your high-quality organic cotton shirts from a single supplier in Peru, right? What happens if their factory is wiped out by a mudslide? Your inventory is safe in your workshop, so your property insurance pays nothing. But you can't fulfill orders for 6 months while you scramble to find a new supplier who meets your quality standards. Your revenue drops to zero, but you still have to pay rent, utilities, and salaries. Your business bleeds out, not from an event that happened to you, but from an event that happened to someone else 5,000 miles away. This is a risk called contingent business interruption. It is one of the most common business killers that almost no one thinks about until it's far too late. It's the definition of an unseen risk. The broker explains that this coverage pays for your lost profits and operating expenses while your key supplier or customer is down. It turns a potential catastrophe into a manageable problem. And then the broker turns to the most sensitive topic of all, her people. Maria, you have 3 employees. What happens when you have to let one go for poor performance, and they turn around and sue you for wrongful termination? What if one employee makes an off-color joke, and another sues you for creating a hostile work environment? These are employment practices liability claims. They are happening in record numbers, and they are emotionally and financially devastating. Even if the claim is completely baseless, you could spend $50,000 on lawyers just to prove your innocence. Your general liability policy explicitly excludes these kinds of claims. It considers them a management issue, not an accident. In the span of 30 minutes, this broker has revealed 4 distinct, company-ending risks that Maria had absolutely no idea she was exposed to. Her fortress was a house of cards. She was protected from a small fire, but completely exposed to the multi-million-dollar lawsuits and operational disasters that actually put companies like hers out of business every single day. This is the fundamental difference in mindset. You, the business owner, are focused on growth, on sales, on product, on customers. You're looking forward through the windshield. A great broker is your co-pilot, constantly scanning the mirrors, the blind spots, the dashboard warning lights you're too busy to notice. They aren't just selling you insurance. They are performing a comprehensive risk diagnosis. They are stress testing your entire operation against the brutal realities of the modern world. They understand that risk isn't just an event. It's a chain reaction. A data breach isn't just a tech problem. It's a financial problem, a legal problem, and a reputation problem. A supply chain failure isn't just a logistics issue. It's an existential threat to your revenue. An employee dispute isn't just an HR headache. It's a legal minefield that can bankrupt you. A direct-to-consumer insurance website can't do this. Its algorithm can't understand the nuances of your business model. It can't ask you about your supplier in Peru. It can't have a frank conversation about your hiring and firing practices. It's designed to sell you a standardized product based on a few simple data points. It sells you a hammer whether you need to build a birdhouse or a skyscraper. A broker, on the other hand, is a master architect. They study the blueprints of your business. They analyze the soil your foundation is built on, your industry, your location, your unique operations. They identify the specific seismic threats, the unique flood risks, the specific legal vulnerabilities that apply to you. And then they don't just hand you a hammer. They design and assemble a comprehensive toolkit with every specialized instrument you need to not only build your fortress, but to maintain it, reinforce it, and adapt it as new threats emerge. Think of it this way. A true best friend doesn't just tell you that you look great. A true best friend is the one who pulls you aside and quietly tells you there's spinach in your teeth before you walk into the most important meeting of your life. They give you the information you need to hear, not just what you want to hear, to save you from future embarrassment or disaster. A commercial insurance broker is that best friend for your business. They point out the massive, glaring, spinach-like vulnerabilities in your risk management plan before a lawsuit or a catastrophe makes you the center of unwanted attention. This counsel, this diagnostic process is priceless. It's a service that goes far beyond a simple price quote. It's the difference between buying a policy and buying a strategy. And that strategy is the bedrock upon which a truly resilient, long-lasting business is built. Now, finding these gaps is one thing. But the real magic begins when the broker takes this knowledge and goes to war for you in the marketplace. This marketplace isn't a friendly neighborhood farmer's market where everyone has their prices clearly labeled. It's more like a chaotic, high-stakes auction house, filled with underwriters who are trained to be skeptical, armed with complex algorithms, and buried under a mountain of applications. Each one is looking at your business through a tiny, unforgiving lens, trying to calculate the precise probability that you will cost them money. To them, you are not a dream, a passion, or a legacy. You are a set of data points on a risk profile. And in this arena, sending your business in alone with a generic one-size-fits-all application is like sending a lamb into a wolf den. A world-class broker understands this. They don't just get quotes. They become your campaign manager, your press secretary, and your lead strategist. Their first move is to craft what's known in the industry as a submission. And this document is everything. A lazy or inexperienced agent will just fill out the basic forms, attach some financials, and blast it out to a dozen carriers, hoping something sticks. This is the equivalent of junk mail. Most underwriters will give it a 30-second glance and either toss it in the no pile or fire back an outrageous go-away price. A great broker, however, treats the submission like a masterfully written novel telling the story of your business. It's a strategic narrative designed to make your company irresistible to an underwriter. It starts with the basics, of course, the financials, the operations, but then it goes deeper. It includes a detailed cover letter, an executive summary that preemptively answers the tough questions an underwriter would ask. If you had a large claim 3 years ago, the narrative doesn't hide it. It explains what happened, the root cause, and showcases the concrete, verifiable steps you've taken to ensure it never happens again. It transforms a red flag into a testament to your resilience and commitment to safety. This submission will include your management team's biographies, highlighting their decades of experience. It will contain a copy of your employee safety manual, your fleet maintenance logs, your disaster recovery plan. It's not just saying you're a good risk, it's providing a mountain of evidence that proves it. The broker is framing your business not as just another applicant, but as a best-in-class operation that any insurance carrier would be lucky to have on their books. They are changing the entire dynamic. Instead of you begging for coverage, they are making the carriers compete for the privilege of insuring you. And who they send this masterpiece to is just as important as what's in it. This is where the broker's relationships become your secret weapon. The insurance industry, for all its technology, runs on human connection. A seasoned broker has spent years, even decades, building trusted relationships with specific underwriters at dozens of different carriers. They've played golf with them, had lunch with them, and have a history of bringing them good, profitable business. When that broker calls an underwriter they know and says, "Listen, Sarah, I have a special one for you. This is one of my best clients. I've personally walked their facility, I've met their team, and they are buttoned up. I'm sending over the submission now, and I really think this is a perfect fit for you." That endorsement cuts through all the noise. The underwriter's ears perk up. That submission goes to the top of the pile. It gets a serious, detailed review because it comes with a seal of approval from a trusted source. This inside track can be the difference between a standard quote, a declination, and a phenomenal offer that nobody else could get. With the submission in the right hands, the real negotiation begins. The broker orchestrates this process like a symphony conductor. They might give one trusted carrier an early look to set a competitive baseline. Then they'll take that initial offer and approach 2 or 3 other carriers, creating a bidding war for your business. They'll leverage one carrier's strength in property insurance against another's aggressive pricing on liability, forcing them to sharpen their pencils. But here's the part that separates the true professionals from the pack. They don't just negotiate on price. Any agent can ask for a lower number. A top-tier broker goes to war over the fine print, the terms, conditions, and exclusions that can make or break you when a claim occurs. They'll look at a policy and say, "The premium is good, but this cyber liability sublimit is way too low for a company that handles this much client data. We need to increase it from $50,000 to $500,000. They'll fight to have a restrictive warranty removed from the property policy, a clause that could have voided your coverage on a technicality. They'll argue to add crucial endorsements that the average business owner would never even know to ask for. Things like waiver of subrogation or primary and non-contributory wording, which sound like legal jargon, but are often required in client contracts and can prevent catastrophic legal battles down the road. They might get a specific exclusion for professional services amended to better reflect how you actually operate, closing a gap that could have led to a multi-million-dollar uncovered lawsuit. This is surgical negotiation. It's about customizing the policy, molding the off-the-shelf product into a bespoke suit of armor designed specifically for your company. And for the truly complex or hard-to-place risks, the new technologies, the high-hazard industries, the broker unlocks another level of the marketplace entirely. They have access to wholesale brokers in specialty markets, the insurance world's equivalent of a special ops team. These are markets that don't deal with the public at all. They work exclusively with retail brokers to write the most unique and challenging risks. This is how you get coverage for a satellite launch, a major music festival, or a groundbreaking biotech firm. It's a whole ecosystem of expertise that you can only access through the right guide. After this intense period of marketing and negotiation, the broker doesn't just email you a spreadsheet with 3 prices on it and say, "Pick one." They come back to you as your trusted advisor. They present a detailed proposal, laying out the options side by side. But it's not just about the premium. They'll compare the financial strength ratings of each carrier, giving you confidence that the company you choose will be there to pay a claim in 10 years. They'll provide intel on each carrier's reputation for claims handling. Are they fast and fair? Or do they fight you every step of the way? They'll highlight the critical differences in the policy language they negotiated. The final presentation is a strategic analysis, culminating in a clear, well-reasoned recommendation. They'll say, "Carrier A is $5,000 cheaper. However, I'm recommending Carrier B. They agreed to remove the professional services exclusion we were worried about. Their definition of bodily injury is much broader, and their dedicated claims unit for your industry is the best in the business. For the long-term security of your company, this is the smarter play." This entire process, this meticulous storytelling, this leveraging of relationships, this expert-level negotiation, is the invisible engine that drives immense value. It transforms insurance from a painful, commoditized expense into a powerful strategic asset, custom-built to protect everything you've worked so hard to create. But let's be honest, the real test, the moment of truth for any insurance policy, isn't when you're signing the check to pay the premium. It's not when you're reviewing the documents. It's in the chaotic, heart-pounding, stomach-in-your-throat moments after disaster strikes. Imagine it's 3 in the morning. Your phone rings and it's the call every business owner dreads. There's been a fire at your facility, or a pipe burst, flooding your entire inventory. Or maybe it's not a physical disaster. Maybe your top salesperson was in a horrific accident in a company vehicle, and the liability is staggering. Or a hacker has locked down your entire system, demanding a ransom that could bankrupt you. In that moment of pure panic, as you're racing to the scene or staring at a ransomware note, your meticulously crafted business plan evaporates. Your 5-year forecast becomes meaningless. All that matters is survival. And your insurance policy, that stack of paper you filed away months ago, suddenly becomes the single most important document in your entire company. Now, what happens next depends entirely on a choice you made long before the crisis. Let's play out one scenario. You bought your policy online or through a captive agent who primarily serves the insurance company. Your first call is to an 800 number. You navigate a phone tree, you're put on hold, and you finally get a junior claims representative in a call center 1,000 miles away. They give you a claim number. They tell you an adjuster will be in touch within 48 to 72 hours. 72 hours? Your business is bleeding out right now. When the adjuster finally arrives, clipboard in hand, you need to remember one critical, non-negotiable fact. They are not your friend. They are a highly trained professional whose primary job is to protect the financial interests of their employer, the insurance company. Their goal is to close the claim as quickly and as inexpensively as possible. They will be polite, they will be professional, but they will interpret every ambiguity in the policy in the carrier's favor. They will ask for mountains of documentation you don't have. They'll question the value of your lost inventory. They'll argue about the definition of business interruption. You, the business owner still reeling from the disaster, are now expected to become an expert insurance negotiator, a forensic accountant, and a legal scholar, all while trying to keep your company from collapsing. You're alone, facing off against a multi-billion-dollar corporation's claims department. It's an unfair fight, and it's a fight that countless businesses lose every single day, not because their claim wasn't valid, but because they didn't have a professional advocate in their corner. Now let's rewind. Let's go back to that 3 a.m. phone call. But this time you have a true commercial insurance broker. In this scenario, your first call isn't to an anonymous 800 number. It's to your broker's cell phone. And they answer. That one simple act changes everything. The panic doesn't vanish, but it's now shared. You're no longer alone. Your broker becomes your crisis manager, your quarterback. They've been through this dozens, if not hundreds of times before. While you're dealing with the shock, they're already executing a plan. They tell you exactly what to do and, more importantly, what not to do. Don't sign anything from the restoration company yet. Don't give a recorded statement to the carrier without us. Start taking photos of everything right now. Here's how to document your immediate expenses to ensure they're covered. They report the claim to the carrier for you, but they don't just send an email. They call their high-level contact in the claims department, the one they've built a relationship with over years, and they frame the narrative. They set the expectation that this is a significant, legitimate claim for a valued client, and it needs to be handled with the appropriate level of seniority and care. When the carrier's adjuster shows up, the dynamic is completely different. It's no longer an expert versus an amateur. It's an expert versus an expert. Your broker is there, standing shoulder to shoulder with you. They speak the same language as the adjuster. They have a copy of the exact same policy, and they know its nuances, its endorsements, its potential traps, and its hidden pockets of coverage. Let's get specific. The adjuster might look at your damaged custom machinery and value it based on a depreciated, actual cash value. Your broker steps in and points to the replacement cost endorsement they fought to include in your policy, a detail that could mean the difference between getting a check for $30,000 or $300,000. The adjuster might offer a paltry sum for business interruption, using a formula that minimizes the carrier's payout. Your broker will have already engaged a forensic accountant to meticulously calculate your actual lost profits, your continuing overhead, and the extra expenses you're incurring, and they will present an ironclad case for a much, much larger figure. They'll argue over the period of restoration, fighting to make sure you're paid not just until the day you can reopen your doors, but until your business has actually returned to the level of income it was producing before the disaster. This is the battleground where a broker earns their keep 10 times over. They are your advocate, your translator, and your warrior. They pore over every line of the policy, that one you bought and filed away, and they find the leverage. They know that the definition of building can be expanded to include your new signage. They know that the debris removal clause has a sublimit you need to be aware of. They know how to package and present your losses in the most favorable way possible, anticipating the carrier's objections and preparing counter-arguments in advance. The insurance company knows that dealing with a top-tier broker is different. They know they can't use the same delay tactics or lowball offers that often work on an unrepresented business owner. The broker has the credibility and the portfolio of business to escalate the issue. They can go over the adjuster's head, to the claims manager, to the regional vice president if they have to. They can say, "Look, we place millions of dollars in premium with you every year. My client is being treated unfairly, and we need to fix this." That's a conversation you, as a single policyholder, can never have. The result? The claims process is faster. The settlement is significantly higher, often multiples of what you would have received on your own. And the burden on you, the business owner, is dramatically reduced. You get to focus on what you do best: rebuilding your business, managing your employees, and communicating with your customers. You let your broker fight the insurance battle for you. Think of it like this. If you were sued, you wouldn't walk into a courtroom by yourself. You'd hire the best lawyer you could find. A major insurance claim is a high-stakes financial negotiation that is, in many ways, just as complex and adversarial as a legal battle. Going into it without a broker is like representing yourself in court. You might win, but the odds are stacked overwhelmingly against you. This advocacy, this expert representation at the absolute worst moment of your business's life, is perhaps the single greatest, yet most misunderstood, value of a commercial insurance broker. They aren't just selling you a product. They are selling you a promise. A promise that when everything goes wrong, you will not be alone. They are the expert on your team, the ally in your corner, ensuring that the safety net you paid for is actually there to catch you when you fall. And let's be brutally honest, that fall is not a matter of if, but when. For every business, there is a moment of crisis. A moment when the abstract language of a policy document becomes a terrifying, concrete reality. And when that day comes, you will quickly discover that a major insurance claim is not a transaction. It is a battle of documentation, of interpretation, of negotiation. And the person on the other side of the table, the insurance company's adjuster, has one primary objective: to minimize the carrier's financial loss. Their job is to protect their employer's bottom line, not yours. They are a professional trained in the art of the policy, an expert in finding the exclusions, the limitations, the reasons why your claim might be worth less than you believe. Imagine trying to fight that battle alone. Your warehouse just burned down. You're dealing with the emotional trauma, trying to reassure your employees, calling your frantic customers, and attempting to salvage what's left of your operations. And on top of all that, you're handed a 100-page proof of loss form, demanding an itemized list of every single thing that was destroyed: its age, its original cost, its replacement value. You're getting calls from an adjuster asking for maintenance records from 3 years ago, for inventory reports you can no longer access. You spend hours on the phone, being transferred from department to department, feeling like you're screaming into a void. Every day your claim goes unpaid is another day your business bleeds cash. Another day you creep closer to shutting your doors for good. You are emotionally drained, financially hemorrhaging, and completely outmatched. Now rewind. Let's put a broker in that picture. The fire is still a tragedy. The loss is still real. But you make one phone call to your broker. From that moment on, you are no longer the solo fighter. You are the CEO, and you have just deployed your Special Forces commander. Your broker immediately takes charge. They report the claim for you, using the precise language the carrier needs to hear. They translate the jargon-filled requests from the adjuster into a simple, actionable to-do list for you. That 100-page proof of loss form? Your broker has seen 1,000 of them. They sit down with you, guide you through it, and help you assemble the documentation you need to substantiate every last dollar of your claim. When the adjuster starts questioning the value of a specialized piece of machinery, your broker pulls up the policy language they negotiated, highlighting the specific valuation clause, replacement cost, not actual cash value, that ensures you get a new machine, not a check for a 10-year-old piece of junk. When the insurance company offers a lowball settlement, your broker doesn't just forward you the email. They get on the phone and argue on your behalf, presenting a counter-argument backed by evidence, precedent, and an encyclopedic knowledge of your coverage. They become your advocate, your project manager, and your shield. They quarterback the entire process, allowing you to focus on what you do best: rebuilding your business. This is the single greatest value a broker provides. Not just finding you a policy, but making damn sure that policy actually performs when you need it to. Let me tell you about a tech company, a fast-growing software-as-a-service firm. They suffered a massive cyber attack. Not just a simple virus, but a sophisticated ransomware attack that encrypted all of their client data and their own operational systems. The hackers demanded a 7-figure ransom in Bitcoin. The founders were in a full-blown panic. They thought their cyber insurance policy was just for show, a box they had to check to satisfy their enterprise clients. They had no idea what to do first. But they had a broker who specialized in cyber risk. That one phone call set off a chain reaction of expertise. Within an hour, the broker had connected them with a breach coach, an attorney specializing in cyber incidents, whose fees were covered by the policy. The breach coach immediately engaged a top-tier cybersecurity firm to negotiate with the hackers and begin forensic analysis. This was also covered. The broker then helped them activate the business interruption portion of their policy, starting the clock on getting reimbursed for the income they were losing every single second their platform was down. Over the next few weeks, the situation was a minefield of complexity. There were regulatory notification requirements under state and federal law. There were public relations to manage to stop their clients from abandoning ship. There was the actual technical nightmare of trying to restore their systems from backups. Through it all, the broker was the central command, They coordinated with the legal team, the forensic investigators, the PR firm, all of whom were pre-approved vendors on the insurance policy, a network the broker had vetted. They ensured every expense was properly documented for the claim. When the carrier's adjuster initially balked at the cost of the credit monitoring services for the tech firm's affected clients, the broker pointed to the exact sublimit they had fought to include in the policy 6 months earlier. The carrier paid. In the end, the company survived. They paid a negotiated ransom, restored their data, and kept their business alive. The founders later said that without their broker, they would have made a dozen critical mistakes in the first 24 hours that would have either voided their coverage or bankrupted them outright. The broker wasn't just a vendor. They were the crisis manager who saved their company. This level of advocacy is priceless, but a truly great broker doesn't just show up after the disaster. They work to prevent the disaster in the first place. This is the shift from being a policy salesperson to being a genuine risk management partner. They move beyond insurance and into the world of advising. For example, a good broker will ask to review the insurance requirements in your client contracts. They'll spot that crazy clause a new customer is trying to sneak in, the one that requires you to carry $10 million in liability coverage for a $20,000 project. They'll help you push back, providing the language and the logic to negotiate a more reasonable requirement. They'll connect you with resources to improve your safety protocols. If you run a construction company, they might bring in a loss control specialist from the insurance carrier to walk your job sites, identify potential OSHA violations, and recommend training programs that not only make your team safer, but also earn you a significant discount on your workers' compensation premium. For a trucking company, they might introduce telematics solutions that monitor driver behavior, reduce accidents, and lower your auto insurance costs. They are constantly looking at your business through the lens of risk, finding ways to make you a more attractive, less risky client for the insurance marketplace. This proactive stance saves you money in 2 ways. It lowers your premiums over the long term, and more importantly, it helps you avoid the massive indirect costs of a claim, the downtime, the reputational damage, and the management distraction. And this network extends far beyond just insurance. A well-connected broker is a hub of professional services. They work with business owners all day, every day. They know who the best employment law attorneys are. They know which accounting firms specialize in your industry. They know a great fractional CFO who can help you scale. When you have a trusted broker, you gain more than an insurance expert. You gain access to their entire professional ecosystem. They become one of the most valuable connectors you have. A true partner invested in your overall success, not just the slice of it related to your insurance premium. They understand that if your business thrives, their business thrives. It's a symbiotic relationship built on trust, expertise, and a shared vision for protecting everything you've worked so hard to build. But what happens when that relationship is one-sided? What happens when you, the business owner, are the only one invested in your protection? Navigating a world of complex legal documents designed by an industry that speaks its own language. Let's talk about that. Let's talk about Sarah. Sarah built a thriving artisanal bakery from the ground up. Her sourdough was legendary. Her croissants were the talk of the town. Her most prized possession, the heart of her entire operation, was a massive custom-built, imported deck oven. Cost more than her car. It was her magic cauldron. Sarah was smart, savvy, and cost-conscious. So when it came to insurance, she did what many smart people do. She went online, compared quotes, and found a business owner's policy that seemed to cover everything. It had property damage, liability, the works. The premium was reasonable. She clicked buy, downloaded the PDF, and filed it away, feeling proud of her efficiency. For 2 years, everything was perfect. Her business grew. She hired more staff. Then, on a Tuesday morning during the peak holiday rush, the oven's main control board fried. A cascade of mechanical failures followed. It wasn't a fire. It wasn't a flood. It was an intricate, catastrophic internal breakdown. The technician delivered the grim news. A 6-week repair time, parts from Germany, and a bill that would run into the tens of thousands of dollars. But Sarah wasn't panicked. She had insurance. She called the 1-800 number on her policy, filed the claim, and waited. A week later, she got the letter. The one that makes your stomach drop. Claim denied. Buried deep on page 37 of her 92-page policy, under the property exclusions section, was a little phrase, mechanical breakdown. Her policy covered the oven if it was destroyed in a fire, or if a truck crashed through her wall and hit it. but it specifically, explicitly, did not cover it for simply breaking. The very thing most likely to happen to a complex piece of machinery. The policy also had a standard business interruption clause, which she thought would cover her lost income while the oven was down. But that coverage was only triggered if the interruption was caused by a covered peril. Since the mechanical breakdown wasn't a covered peril, her business interruption claim was also worth zero. In an instant, Sarah was facing a 5-figure repair bill and 6 weeks of zero revenue during her busiest season. It was a potentially business-ending event. This wasn't a scam. The insurance company didn't do anything wrong. They sold her exactly the policy she bought. The problem is, Sarah didn't know what she didn't know. She didn't know that equipment breakdown insurance is a separate, specific coverage that needs to be added. She didn't know how to read a policy to find the landmines hidden in the exclusions. She was an expert baker, not an insurance expert. She was trying to do 2 jobs, and the one she wasn't trained for just kneecapped her entire dream. Now let's rewind this story. Let's put a broker in the picture from day one. In their very first meeting, a good broker would have asked, "Sarah, what is the single most important piece of equipment in your business? What's the one thing that, if it goes down, your whole operation stops?" Sarah would have pointed straight to the oven. The broker would have immediately identified that as the primary operational risk. They wouldn't have just given her a standard, off-the-shelf policy. They would have said, "Okay, the standard policy has a mechanical breakdown exclusion. For a business like yours, that's an unacceptable gap. We need to add an equipment breakdown endorsement." That endorsement might have cost her an extra few $100s a year. But when the oven failed, it would have triggered a cascade of benefits. It would have paid for the expensive repairs. It would have paid for the expedited shipping of parts from Germany. And critically, because the breakdown was now a covered peril, it would have triggered her business interruption coverage, paying her the profit she was losing every single day her doors were closed. That is the difference. It's the difference between a minor inconvenience and a potential bankruptcy. It's the difference between having a piece of paper and having a shield. A broker's job isn't to sell you a policy. It's to perform a diagnosis of your risk and prescribe the right protection. Sarah's oven is a powerful metaphor, but this same dynamic plays out across every single industry, in ways most owners never even consider. Think about the software development firm handling sensitive client data. They think their general liability policy covers them. They don't realize they need a specialized cyber liability policy until they get hit with a ransomware attack, and the forensics, credit monitoring, and notification costs climb into the hundreds of thousands of dollars. A broker would have known to ask about their data security protocols from day one. Think about the nonprofit organization with a passionate, well-meaning board of directors. They don't realize they need directors and officers or D&O insurance until a disgruntled former employee sues the board members personally, putting their houses and life savings at risk. A broker would have explained that risk is inherent to having a board. Think about the construction contractor who signs a huge contract with a new client. They don't read the fine print in the insurance requirements section, which demands a specific pollution liability endorsement and a waiver of subrogation. They submit their standard certificate of insurance, which gets rejected, delaying the project and costing them credibility and money. A broker would have reviewed that contract before it was signed, ensuring the insurance was perfectly aligned, making the process seamless. This is the hidden value. It's the proactive counsel. It's the ability to see around corners. And this becomes exponentially more important when the market gets tough. In the insurance world, we go through what are called hard and soft markets. A soft market is great for buyers. Premiums are low, coverage is broad, and insurers are competing for your business. But a hard market is the opposite. After a period of major losses like a big hurricane season, widespread wildfires, or even a pandemic, insurers get scared. They tighten their belts. They raise premiums dramatically, narrow their coverage terms, and simply refuse to insure certain types of businesses they see as too risky. During a hard market, going it alone is like trying to sail a small boat through a hurricane. Those direct-to-consumer online portals? Their algorithms just start saying no. The carriers you've been with for years might send you a non-renewal notice out of the blue, leaving you scrambling to find coverage before you're in breach of a loan covenant or a client contract. This is when a broker truly earns their keep. This is when they become your business's indispensable best friend. Because while you only know one or two insurance companies, your broker has relationships with dozens, even hundreds of carriers. They have access to specialty markets and wholesale brokers that you could never reach on your own. When one carrier says no, your broker is already on the phone with 10 others. They know which carriers are still willing to take on risks in your industry. They can leverage their entire portfolio of business as influence, negotiating on your behalf from a position of strength. They can help you craft a narrative, highlighting your safety procedures, your excellent claims history, your management experience, to make your business a more attractive risk to underwriters. In a hard market, a broker is not a convenience. They are a lifeline. They are the market navigator who knows where the safe harbors are hidden when the storm rolls in. Choosing to work with one isn't just about getting a better price on a policy. It's a fundamental strategic decision about the resilience, longevity, and ultimate survivability of your business. It's the difference between building a business on sand versus building it on bedrock. One is easy and cheap at the start, but the first real storm washes it all away. The other requires foresight, expertise, and an upfront investment in a solid foundation. A foundation that will withstand the inevitable tempests. And make no mistake, the storms are getting stronger. We're operating in an era of unprecedented complexity. A decade ago, did the average Main Street bakery owner worry about ransomware attacks crippling their point-of-sale system? Did a small manufacturing firm have to factor in global supply chain collapses, or the risk of a regional flood that statistics said was a 1-in-100-year event, which now seems to happen every few years? The landscape of risk has fundamentally changed. It's a tangled web of digital threats, regulatory shifts, climate volatility, and economic uncertainty. Navigating this new world with a generic, off-the-shelf insurance policy you clicked on is like trying to cross the Atlantic in a rowboat with a tourist's map. You might be fine on a calm day close to shore, but you are utterly unprepared for the deep ocean. A great broker isn't just handing you a life jacket. They are the seasoned captain who has sailed these waters 1,000 times, who knows how to read the sky, and who has built a vessel designed to weather the storm. This requires a profound shift in mindset for many business owners. We have to stop viewing insurance as a necessary evil, a line item on the expense report to be minimized at all costs. It's not a commodity, it's a strategic asset. You wouldn't hire the cheapest lawyer to defend your company in a lawsuit. You wouldn't hire the cheapest accountant to manage your complex financials. You'd hire the expert, the specialist, the trusted advisor. Why then would you entrust the very survival of your business, the culmination of your dreams, your sweat, your capital, to the cheapest, most automated, and least personal option available? The value of a broker isn't just in the policy they find. It's in the disasters they help you avoid altogether. It's the conversation where they say, "I see you're storing materials this way. The fire code just changed, and a small tweak here could not only prevent a catastrophe, but also lower your premium." It's the email they send about a new cyber threat targeting your industry, with recommendations for immediate action. It's the risk management plan they help you develop, turning your business from a reactive victim of circumstance into a proactive, resilient fortress. So, how do you find this indispensable partner? How do you separate the true advocates from the mere salespeople? It's a process, and it starts with looking in the right places. Ask for referrals from other trusted professionals in your network. Your attorney, your CPA, your mentors. These individuals understand the value of expert counsel. Look to your industry's trade associations. They often have lists of brokers who specialize in the unique risks your sector faces. A broker who understands the nuances of a construction site is worlds apart from one who specializes in software-as-a-service startups. Specialization matters. Once you have a short list, you need to interview them. And yes, you should treat it like a job interview for a key executive position, because that's exactly what it is. Don't let them control the conversation with a sales pitch. You drive the discussion with pointed, strategic questions. Start with this. Forget about price for a moment. What is the biggest risk you see for a business like mine that I'm probably not even thinking about? A great broker's eyes will light up. They'll lean in. They'll start asking you detailed questions about your operations, your suppliers, your employees, your data security. A salesperson will just pivot back to talking about their low rates. Then ask, "Walk me through your claims process from the client's perspective. If my building burns down at 2 a.m. on a Saturday, what happens next? Who is my first call? What is your role?" Listen carefully to their answer. Are they the one who takes the lead, who coordinates with the adjuster, who advocates for you every step of the way? Or do they just give you an 800 number and wish you luck? You are hiring an ally for your worst possible day. Make sure they're up to the task. Follow up with questions about their value beyond the policy itself. Ask, what kind of risk management resources do you provide? Do you offer safety training materials, contract review services, or cybersecurity assessments? The best brokers are constantly adding value throughout the year, not just at renewal time. And finally, ask for references. But don't just ask for a list of happy clients. Ask for a reference from a client who had a major complex claim. That's the true test. That's where the rubber meets the road. Talk to that business owner. Find out if the broker was in the trenches with them, fighting for their recovery. Pay close attention to the red flags during this process. A broker who only wants to talk about how much money they can save you is a massive red flag. Price is a component, but it should never be the primary driver of the conversation. The cheapest policy is often the one with the most exclusions and the lowest limits, the one that will fail you when you need it most. Be wary of anyone who doesn't show a deep, genuine curiosity about your business. If they're not asking probing questions, they can't possibly understand your risks. And if they can't understand your risks, they can't properly protect you. Ultimately, choosing a commercial insurance broker is one of the most critical decisions you'll make as a business leader. It's an investment in peace of mind. It's an investment in resilience. It's the act of bringing a master architect on board to help you design and build your company's financial defense system. They are the ones who will check the blueprints for weaknesses, use the strongest materials, and ensure that what you've built can stand the test of time. They are your advocate in the boardroom of the insurance carrier, your strategist on the battlefield of risk, and your first responder in a crisis. They are the partner who lets you sleep at night, knowing that someone is standing watch, protecting the business you've poured your life into. So the question isn't whether you can afford to work with a world-class commercial insurance broker. In this increasingly uncertain world, the only real question is, can you possibly afford not to?